Welcome back to Pave the Way podcast here. I am here with Russ Morgan and Joey Mure. I got his name right.
You nailed it.
I was supposed to say Joey's first, but I got a little nervous, I guess. So they are from Wealth. They are from Wealth Without Wall Street, and today we're going to be talking about the 5 pillars of wealth without Wall Street. So I'm very excited to have them on the show. So how you guys doing today? Thanks so much for coming on.
Oh man, we're doing great, and I know it may be a little bit off color for us to be trying to do things without Wall Street since you spend so much time in New York. But hopefully it'll be to benefit your listeners today.
That's
no
awesome.
doubt. Yeah, it's great to be on the show, Greg.
Awesome. That's funny. I actually I remember when I first kind of got started in all this stuff. Me and my buddy, we took a trip to Wall Street for the day, and we went and saw the bull and all this financial stuff, and I used to be a pretty big fan of Jim Cramer. I thought he was pretty entertaining. And me and my buddy would always watch Mad Money. And I told him when we were down there, this is a true story, I swear to God, the whole law of attraction thing. I said, imagine we saw Jim Cramer walking around at Wall Street, how crazy that would be. And we're pulling out of a diner. And next thing you know, Jim Cramer walks right by us, and we stopped him and got pictures with him. And it's on my Instagram. It's pretty funny. So,
that's really cool.
Action. So anyway, before we get into the 5 pillars, I guess we'll have each guest just kind of introduce himself, their background, and then how they got into what they're doing, and then we'll get into the core of the show. So you start first, Joey.
Yeah, well, I know you've had some other guests on the show that had a finance background. I was actually in the mortgage business for 11 years, and realized, man, there's some things that banks are telling you to do, Wall Street is telling you to do, that really are not helping you get ahead financially. At least it wasn't for me. I started realizing, man, I'm making more money than I ever really thought I would make. And yet I still don't have, that kind of tangible result. Like there's nothing, my accounts aren't growing. I don't have more passive income. Like something is kind of wrong with the current situation. And that's when I met Russ. We were friends first, and then he started teaching me some of the things we're going to probably dive into today briefly. And it was like a light bulb went off, like, wow, okay, this is a different strategy. This is a way that I can take back control. And it immediately started having an effect on the way I think and the way that my family was growing wealth. And it was so impactful that 4 years after that, I decided to quit my job in the mortgage business. I was leading 25 loan officers and doing over 200 loans a year, making a substantial income. I just said, man, it's more important that I teach this to people so that they can have the same results that I'm having than it is to continue doing something I'm good at. So anyways, that was about 5 years ago, and we launched Wealth Without Wall Street from there. So that's a little bit about me.
Awesome.
Yeah. Well, kind of, I have that financial background where I started in the traditional Wall Street mindset. That was, doing IRAs, 401ks, money management. I had the economy by the tail. What makes a rising market, right? Is all the being a part of that boat that's a part of that rising tide. And I was kind of riding with that, and all the good stuff that was happening from 04 or 05, 06. And then I saw it all come crashing down in 07 and 08 as a CFP. So I like to say I'm a recovering CFP, certified financial planner. All the things I thought I knew about money that everybody else didn't know, I realized I was just a part of the group. I had the certification, but it really didn't teach me anything. And it really took that kind of market crash to bring me to do some real research, start looking into what successful people were really doing with money. And since 2009, it's been a journey for us to continually find ways to put ourselves in control. And since then, people ask me all the time, well, do you not invest in Wall Street? I mean, your brand is called Wealth Without Wall Street. And I haven't owned a stock, a mutual fund in over 10 years. And we've been very successful. We've had a lot of different business ventures and real estate deals that we've got into. And it's fun to know that, when the market went down 900 points yesterday, I didn't care. It didn't bother me, and it didn't bother most of the people that we talked to.
It's crazy. Awesome. Well, I appreciate both of you sharing your background, and I'm really excited to kind of get into the conversation today, because this is something There's a really good book that I recommend. I'm sure you guys, I don't know if you've heard of it. It's not that popular. It's called Unscripted by MJ DeMarco. You guys
Oh,
ever?
no.
No, I'm not familiar.
So anyway, the long and short on that book is that, though he kind of breaks down the whole kind of traditional society, go to school, get a job, invest in the stock market, whatever, retire when you're 100 years old and live rich for 2 years, whatever. And he kind of breaks down the whole Wall Street thing, like Wall Street really being like a casino, especially for people trying to build wealth, because at the end of the day, it's a vehicle that's really uncontrollable. And he says that he uses the markets in Wall Street because he's had a successful business. He uses it for income and liquidity. So when he puts 5 million into a stock or a bond or whatever, and they pay him a dividend, he's making passive income, and then he can always sell those, shares whenever he wants. So he has a whole different approach on it. But for the traditional person, I do really like your model, the Wealth Without Wall Street. And I'm really excited to kind of dive in today on the theme of the show, which is the 5 pillars of building wealth without Wall Street. So let's just get right into it. We got 5 to cover. So we'll start with number 1.
Yeah, so the concept behind this kind of wealth without Wall Street all stem from just looking at money from a very simple standpoint, taking all the glamour and glitz that happens a lot. There's a lot of shiny object syndrome that people get. They get in the FOMO, right? That if I don't participate in this one venture, that I'm going to miss out. And so kind of the concept behind the 5 pillars is that, one, that we need to find things that work. And so we start with this concept of cash flow as being the very first pillar within Wealth Without Wall Street. And shocking that we came up with that, right? I mean, that's just the very simplest of levels. But, as we look at money, we really kind of think back to like an old psychology principle that existed. I don't know if you were like me, you probably slept or, not very attentive in that class. I didn't feel like that was going to be the area I was going to spend a whole lot of time in. But there was one subject matter. It was called Maslow's hierarchy of needs. Greg, do you ever remember that in school at all?
Yeah.
I mean, that basic motivation that we have to achieve the bare minimum before we will move up the ladder. And whether it's food and, water at the very bottom, and then we're moving to shelter, security, relationships, esteem, and then ultimately achieving our highest purpose and self-actualization, right? And that's just this basic level that we think of. So it's the easy way to know that the guy on the side of the road panhandling is not interested in his jump shot as much as he is getting, actually like a hamburger, right?
Exactly.
And that's when we look at money, we think, well, shouldn't we follow that same approach? So we created this kind of hierarchy of wealth, and at the bottom was cash and cash flow. And you're in the real estate investing business, and cash flow is huge. Everybody's looking for a way to create more of it. But a lot of times what we found, over the years, I've been in the financial industry for 15 years. Most people start at the top. They try to start, investing at the, in the most risky of things because that's what they're taught, instead of actually creating basic cash flow needs. And so we look at cash flow in our first pillar of Wealth Without Wall Street is really, how do we get better, more efficient with our money? And that goes into something simple like debt pay down, or how to acquire assets using debt and doing it in a way that is putting us in control. And the second way is, a lot of our clients hate paying taxes. I mean, I think all people hate paying taxes, but, we seem to, work with a lot of people that are paying, $500,000 in taxes sometimes. And if you can find a way to reduce your tax bill by using what Congress has presented to us as business owners and investors, then we actually can keep more of that money. So those are kind of big pillars that we put within that first pillar, is how do we keep more of the money? How do we be more efficient with it?
I mean, at the end of the day, cash is either flowing away from you or towards you. And we just, blame me for this, but I'd rather have it flowing towards me than away, right? So that's kind of the basic of how we think about cash flow to begin with. And then that kind of leads us into the second pillar, which, if you're talking back to what Russ was talking about, is that cash and cash flow is at that very bottom level of investing. It's just, there's no risk and there's a lot of control. And so then we want to move into like savings.
Well, I would say this too, Greg. I mean, Joey was in the mortgage industry for 11 years, and he spent his whole time just trying to refinance people. right?
Yeah,
And
right.
I know I'm
Come on, man,
generalizing.
Don't pay taxes on debt.
Right, but isn't that really? It was under the guise of cash flow, wasn't it?
Absolutely.
I mean, when you called somebody and said, "Hey, you've got a 30-year mortgage. I can get you a 15 for roughly the same price, and you can be paying down debt faster." It was a way to help them with cash flow or help them reduce their debt.
Absolutely.
True or false?
Yeah.
Well, I mean, the thing that we have found, though, is that most people put their cash in what they think are assets, but are really dead locations, places that they can't touch it. And that's where, Wealth Without Wall Street is like based off of, is if our money is not accessible, it's not really that valuable to us, right? Like if I told you I could give you a 25% rate of return, but you're not going to get the money for 50 years, you don't care, right? If you could do a deal and get the money accessible within 30 days, like how many more times can you do it, right? I mean, the grocery store is not interested in selling the gallon of milk for a 500% profit, but only being able to sell one of them. They're interested in how many of those deals they can do. And that's the way we think of cash flow is, how do we look at money? How do we find things where we're taught, oh, well, man, because you're getting, a match on your 401k, for instance, if you're still working at a kind of a 9 to 5, and, then you should take it. Well, I'm not saying that a match is bad, but what I'm saying is if I can't touch the money for 30 years, how good is it to me? Is it really going to create the time freedom that I might be looking for?
Yeah, what are you going to do with it? It's sitting there locked up, gridlocked. I mean, it's adding to your net worth, but really you can't take it to buy properties. You can't take it to do whatever you want. I couldn't agree with you more. I think liquidity is value.
Yeah, and that's where cash flow comes. And so those strategies, we start looking at all of this stuff in that first pillar, and it's amazing. It doesn't matter the net worths or the income levels that we see, that there's just a lot of misinformation that has been passed down. I mean, like I said, I'm a recovering CFP. I was a part of that machine that was preaching, doing a lot of these things, pay off our house as fast as we can, put all our money in these qualified plans. And what I found is over time that was really a machine that was benefiting from the access to that cash flow, having it flow to them and away from those people who actually were generating it to start off with.
Yeah, they're really good at marketing so that you give them as much of your cash as possible.
I know. Isn't that so? What do they say in the gold rush? The suckers dig for gold and the smart people sell the shovels. Well, they're selling the shovels there.
They're selling lots of them.
Perfect.
Shovel salesman. That's funny. It happens in every business, though. The real smart ones are selling the shovel.
I like that.
Awesome. All right. So what's the next pillar? That was a good one. I like the first one. I think a lot of people are getting value from this.
So we're going to go back for the second pillar, thinking back to where I came from. I worked for one of the nation's leading banks, and we success leaves clues. I think that's pretty clear in any business. And what we started to realize is that banks know a little bit about making money, right?
Oh,
They know, just talking about the guys that are selling the shovels.
Well, I mean, just in the pre-show, Greg, you were talking about seeing the skyline here in Birmingham. You're like, I didn't even know Birmingham had a skyline. Well, out of the 4 buildings that are downtown, you can just guess who owns those buildings, by the way, that are large enough that you would create a skyline out of.
Yeah. So banks know a little bit about this. And by the way, to add to the whole cash flow conversation, they're cash flow geniuses, right? They take our deposits and then turn around and lend them so that they get cash flow from them. And then they give us a pittance for the use of that money in the meantime. So it's a pretty cool business. So what we do with the second pillar is we say that the cash flow, once we've created it, we found ways that we're unnecessarily giving away cash in the way of tax strategies and other things. Now we can take that money and we can start to save it. And so we can either save like the way everybody always has saved, savings accounts, checking accounts, things like this, or we can find a better savings tool. And we take that again from banks. Where do banks, if you look at their tier 1 capital, where they keep money, the largest place that they put cash is in high cash value life insurance. They do this on their executives and other things. And you would think, I mean, wait a minute, life insurance, wait a minute, isn't that just for protection? Isn't that just for if I die, things like this? And so actually these folks, like I said, the wealthy and the banks and now our clients are working to save large amounts of cash in policies that are creating compounding interest. They're growing tax-free. They're accessible. They have obviously a death benefit attached to them, but that's not our primary purpose. We're solving for the other side of the coin, which is how can I get the most cash at work for me so that I can then do more deals. So using real estate as an example, we have numerous clients that are doing real estate deals, and they say, well, why would I keep saving in a checking account, savings account, that as I stack it up and I prepare for the next deal, then I use that money and it goes to zero, right? It quits growing for me. Whereas these life insurance policies, when we create them properly, we can leverage them, because leverage is huge in real estate. We just use a different vehicle through life insurance to leverage to that next deal, and allows that money to continue to grow.
This was one of those interesting things to me, Greg, coming from a investment background where everything I was looking at was on rate of return, because that's what we taught, right? We're taught, the highest rate of return is what we should do, or the lowest interest rate that we're going to, borrow is the number one factor. But as we were just talking about, cash flow is the most important factor, right? It's not necessarily rate of return. It's not the interest rate that we're paying. And what we realize is that one of the biggest things to attaining and building wealth is not having it ever stop growing, never having that compounding of interest of our money ever stop. And this is where I got introduced at this conference down in Orlando, Florida one year. And I was down there kind of with a bunch of CFPs and other CPAs and investment people. And there was a handful of this like insurance remnant there, right? and there was this one older guy that had written this book called Becoming Your Own Banker. And he's talking about this concept of using dividend paying whole life insurance. And I'll be honest, it took me a while to come around to this concept. But after kind of like reading the basics of it, and then kind of like pointing me to like what Joey alluded to, some of these banks that have billions and billions of dollars in life insurance, I was like, wait a second, they must be doing something that I haven't been taught in my training as a way to use cash. And he kind of said it, and may have missed this, but the uninterrupted growth of our money. And when we take cash, and we're going to talk about this in the other three pillars, because the first two pillars are really getting us in a position to take advantage of opportunities. And our three end pillars are where we put those investments. That's where we get money to go. But we got to be in a position to grow from. And I'd always been a cash kind of person. It was like, well, I'm going to build up enough money in my account to buy this rental property, or buy this house, or buy this car, or whatever it was. But then I gave up what that money could have been earning, not only because, one, it was sitting in a checking account earning 0.01, but two, when I did invest it, now I have the investment, but I no longer have what the cash was earning. And I started studying this concept that these guys are using. And it was just like this basic premise of putting money into a place that's safe, that's got all these protection measures, and it's earning this 2 to 5%, consistent rate of return, but I can leverage against it to do all these other things. And that's where like the light bulb moment happened for me. So when a lot of times people see our second pillar and they say life insurance, I go, what are you guys talking about? But then all of a sudden, when they really get it, it's amazing. Like when we were like, hey, look, just don't take it from me. I mean, yeah, I own 19 of these whole life policies now. Like, I'm a full form believer in this. But go look at like what major corporations and major businesses are doing with their money. And I'm sure most of your real estate investors probably already know this because somebody's taught it to them in the past, but it's crazy the opportunity that exists if we can keep our money at work. And that's what our second pillar is about, is literally just finding a better mousetrap for our cash. It's not for it to sit there. It's literally just a place that we're going to put it. And then as we're flipping deals or we're got rental income, that's the place that we're flowing it back through before we send it back out.
Greg? You there? Greg, did we lose you?
Is there any way this is our internet or this is theirs?
I don't know. I'm looking.
Oh, sorry about that. Internet took a nap. We're back.
That's all right.
I mean, I know we had the conversation about life insurance. You didn't have to hang up on us so fast. I mean,
I'm going to get some life insurance. No, okay. Sorry about that. So the first one is obviously cash flow. The second one is just having your cash, obviously. This internet, this New York internet. Oh, it's doing it again. Jesus.
No worries.
I think we're good. We're good. Sorry about that. Yeah, we're good. My internet gets a little spotty in the downstairs where the office is. So anyway, so that was awesome. And it's funny, I never really thought about the whole life insurance policy thing that way. I think a lot of people, they think about life insurance just as a death benefit, but they don't think about it from the perspective of you can use this to make more money, because you got to understand how it works, which is what you guys are experts on. So that's really, really interesting.
Yeah,
really interesting.
If you go research any of the big banks, like Joey worked at Wells Fargo, obviously one of the nation's largest, they have like $22 billion in cash value life insurance. It's pretty amazing. So it's like one of those things where, again, I don't have to be the smartest guy out there. Just follow what success does and try to emulate it as much as possible.
Right. Yeah, banks do make mistakes, but not $22 billion mistakes.
No,
typically.
No, unless it's 2007.
Exactly. Yeah,
exactly.
Awesome. So what's the third pillar? Those first two are very interesting. So what's the third one?
So if we kind of go back towards what Russ was mentioning, like that hierarchy of needs or hierarchy of wealth in this case, is we start with that cash and then we move into things that we can own and control, right? The things that we have knowledge about. So I love your podcast because you're educating people on a business that they can own and control, which is real estate, right?
Yep.
And so that's our third pillar, is a business that you own and control. How do we then create a business if we don't have one? Or two, a lot of the people that we work with are already business owners, and they're trying to find ways to optimize that business to ultimately make it a passive business at some point. Right? So Robert Kiyosaki, I'm sure many of your listeners are big fans of his, as we are. He talks about the quadrants, right? The employee, self-employed, then business owner and investor. And many people that own a business think that they own a business, but really they own a job. And they went from working for somebody else to working for their business. And our goal is that we want to educate and provide resources and things that will help you to get your business to a point where it's no longer requiring you to be active in it, but it's still producing an income.
Well, I think if you look at this, and you've seen this personally in your life, I'm sure, is that your number one asset is what?
Your time.
Yeah. It's and your ability to add value in that time and to create more money in that time. And we are our greatest asset. Our businesses are our greatest investments. There's probably something I'm sure you've shared plenty of times on your podcast that you've done. But like me, I think back to the thousands and thousands of dollars and thousands of hours I've poured in to learning how to be a better business owner, how being better at what we're doing. I mean, just what we're talking about at the podcast. Now, some of your listeners are like, man, you need to really work on that podcasting part because you still suck. But I'm from the South, so my education level is not up there with everybody. But it really, that when we're investing in ourselves, investing in our trade, there's no better dollars we can be investing. And that's kind of why it's one of the, the top three in our Wealth Without Wall Street, because it really goes back to investing in the things that you can control. And I can't control investments that happen, say, on Wall Street. I can control, though, my education and understanding of the things where I'm going to put my money. And for us, and it doesn't matter if you have a physical business that sells things, or literally your business is your time and your ability to learn more about it. That's what we say is really one of the best things. That's been around since the beginning of time. And the way that we enhance that is through investing more dollars, more time, technology, you name it, into enhancing our ability to go out and create a higher rate of return with less risk, because that's really where the game should be played at, is not high risk, high return, because really it ends up being the opposite. It ends up being high risk, low return, right? Warren Buffett, Steve Jobs, Jeff Bezos, those guys didn't go out and take huge risk in the fact that they had no idea what they were doing. Now they took risk and they created businesses that could have easily have failed. And a lot of businesses do fail, but they knew what they were doing and they had an idea and they continued to pour money and effort into that. And the more that they learned, the more that they did, they actually reduced the risk that they were taking and ultimately increased their return, infinite, right?
To behemoths, to the blue chip companies they are today. So
yeah.
I like how you brought that up, the business thing. I think that's a big thing. And I think just to add to that, I really, that's probably my favorite pillar so far, is that really in that book I was mentioning, I think I mentioned either on this podcast or before we recorded Unscripted, he says the best way to get rich is you really have to be an entrepreneur. It's very difficult if you're not an entrepreneur or a salesperson, but you have to be in a situation where you can essentially control your income. If you have a job, there's nothing wrong with a job. If that's what you like, that's what you like. And some people would rather have jobs. That's totally fine. There's no right way to do it. But if you own an asset as a business or you're in sales and you're only getting paid when you provide value in the marketplace and you sell something, you can scale that. You can basically reverse engineer how much money you want to make. If you have a job and you're working to work and you're not working to learn, which is a whole other thing. That's a whole other podcast.
Exactly.
You're really capped out at whatever your salary is. And then it is what it is.
Even let's just say, again, we have a lot of clients that, like you said, they love the jobs that they're in. They have no interest in being a business owner. But what we have found is if you go to any business, as business owners, any of our employees come to us and say, hey, by the way, I've been watching this business for the last 6 months, year and a half, whatever the time frame they've been here. And, I've noticed that there's an opportunity for the business to grow and expand in this area. And what I'm going to do is I'm going to go spend some time and effort to learn how to do it. And I'm going to show you, and then let's get together and let's talk about what sort of value that would bring to the business. And ultimately, can I participate in that? As a business owner, what am I going to say? No, go back to doing that other task that you were doing. Don't worry about that sort of stuff. Yeah. Absolutely not. Some people think, well, I have to go back to school in order to make more money. And sometimes going back to school can make more money. Sometimes it can just cost you more money. It's literally, if we're investing in ourselves and finding out how can I add value in the business that I'm in, whether I'm just an employee or I'm an owner, there's where money can be created. So you're right. Businesses are benefited by the capital. And I'm listening to the book Fake right now by Robert Kiyosaki. And he talks about having your balance sheet. And, his concept as an asset is anything that puts money in your pocket, and liability is anything that takes out. He says, let's start looking at the human asset and human balance sheet. How many people do you have that are associated with you or in your organization that are assets, and how many of them are liabilities?
I love that. That's so gold. That's so gold. I love it. What's that Jim Rohn quote? I always say this. It's like, if you work hard at your job, you'll make a living. If you work hard on yourself, you'll make a fortune.
That's right.
I have a
great quote.
Yeah. I just listen to Jim Rohn all day long, so I know all it today, but awesome. So the business part, that's critical, whether it's your business or whether you're working in a business and you can bring value to your boss, that's just critical to know. So we got 2 more left. This has been a really fun show. So what's the 4th pillar for Wealth Without Wall Street?
So typically in that 4th, we're going to leverage into something that's a collateralized asset. And that is right up your alley with real estate. Now, we don't pretend to be the experts in real estate, but we know that real estate is one of the greatest places to invest outside of Wall Street, that you now have something backing up that investment, that if everything went terrible, you're not going to lose every dollar that you put into it, right? And if you're using leverage, which most people are when it comes to real estate, then you can actually really improve your returns and create more tax benefits by using real estate. So we have people that invest through flipping land. We have people like, as you and I got connected through Scott Carson, that do note investing. Yeah. We have people that do mobile home parks.
Multifamily.
You name it.
It is like, we've seen real estate as just that one thing where outside of living on the Big Island in Hawaii, we're not making any more of it. So whatever form of real estate there is, whether that's land or it's buildings or manufactured homes, if you will, there's so much opportunity in real estate. Our society is ever becoming more transient. So there's a lot more renters out there. We're seeing, the millennial generation not buying a ton of homes. You got a lot of the baby boomers that are downsizing and are moving around. And so there's lots of opportunity still in the real estate world for us to learn. And of course, every HGTV show out there has made people real estate flippers and so forth. There's still, at the end of the day, and this is why it's one of our pillars, is that it is an asset. It's a physical, tangible thing that even when you make mistakes, and Joey and I kind of like make fun, like, please don't take our advice on real estate, because the real estate deals that we've got involved in, and they all happened really early in our careers before we had done any research. We failed miserably. And the reason why we failed miserably, because we didn't take our third pillar advice back in those days. We didn't invest in ourselves. We didn't invest in our knowledge level to understand what we were doing. We just said, I just want to buy real estate. So, you just go buy one, right? So, but when done right, you think about it as a tool that is going to exist, that can provide value to the world. You provide shelter that somebody somebody's a renter, they love it. Somebody's a buyer from me, they love it. It's a way to add value to the world. And if you do it right, and most people in the construction industry really suck at just doing what they say they're going to do. If you can be one of those providers out there, it's really easy to be successful and to make money. And the last part, kind of still tying it back to our first pillar on cash flow, the government has given us all sort of tax advantages for real estate. And it's one of those things where we literally can make a good amount of money in doing it and take advantage of the things that they said, hey, by the way, we'll give you tax breaks if you do it this way.
It's amazing. You guys just hit it right on the head. It's a business that and I think it's also to add to that, I think once you get past the newbie learning curve, it's such a fundamentally simple business. The assets worth something, the bank will loan you a certain percentage of that. It's secured by, your investment is collateralized, like you said earlier. It's not like, I'm not a rocket scientist. And this is a very simple business to understand once you get past the learning curve in the beginning with all the jargon and the terms and all that. But I think it really is real estate's I think when I first got into this business 4 years ago, I remember listening to a podcast and the guy said, real estate is the final frontier where the average man has a legitimate shot at financial freedom, because it's a business that it kind of checks all the boxes. It's an asset that checks all the boxes. So awesome. I'm glad you guys mentioned real estate. I knew it was going to be on there. I just didn't know if it was going to be 1 or 5 or 2, 3, 4. So awesome. So in terms of real estate, let's just kind of hit on that one a little bit deeper, and then we'll go to the 5th one. What's in your guys' opinion, what is your preferred strategy when it comes to real estate? Because there's so many ways to do this business. Do you think buy and hold or buy and sell is a better, strategy, or do you think it's a case by case basis?
I say yes. It is, like you said, there's just different mentalities. I think for a lot of the entrepreneur types out there, and if you're not doing some sort of financial personality assessment on yourself, you need to, right? You need to know whether it's DISC, Colby, Culture Index. There's tons of these things out there. And we have one within our community that kind of does that assessment, that teaches people kind of where they're, built and the way that they, find enjoyment in life. If you're one of those that if you're that classic entrepreneur where you're constantly on the move, probably buy and hold you're going to struggle in that. And because you're going to probably make deals that maybe not be perfect, because you're thinking, oh, maybe I can flip this thing in a couple of years. I know it's sort of supposed to be a buy and hold, but and you make a mistake there. So, the buy and flip is a better approach. But if you're looking for steady cash flow, if you're more detail oriented, you're okay with that. Then obviously, I think I heard Kiyosaki say the other day he had like 6,500 homes or something like that out there, not including all the multifamily and commercial stuff. And maybe I missed on that number, but it's pretty close to something crazy like that. Obviously you can create an income stream that is amazing and, second to none in a lot of situations.
Well, and I would add to this, I'd say the way I see real estate is it's a tool, right? It's not the end, but it is definitely a tool. And so you have to use the tool from whatever perspective. Just like we talked about life insurance earlier, people can look at life insurance from one perspective and say, oh, it's just for protection. And then on the same minute, I'm looking at the other side saying, hey, this perspective is for cash. Well, it's the same tool. Why do I look at it differently than you? Well, so we have some clients that are actively buying real estate as a passive 100% turnkey cash flow model that gives them additional tax benefits. They're doing something else. Maybe they have a full-time business that they're running and they don't have time to invest like you have been full-time in real estate as a business. But then there's others, and I'm sure that 4 years ago, you were doing certain strategies in real estate that you're not doing as much of today, or
Sure.
you're progressing, right? And I've seen this with numerous clients. They come in and they may start with wholesaling because it doesn't take as much capital to get started. And then they move into more of like a fix and flip. And then they say, well, you know what? Like we just had a guest on our podcast the other day who's now moving into self-storage because he's like, man, that's the way that I can start to scale my time that's much more valuable to me today than it was when I first started. And then, you know, maybe they get into multifamily. There's a progression if this is your main business that I think each one has a point of reference that's valuable or, you know, again, it just depends on what perspective you're approaching it from.
Well, I love what you said there too. And Greg, and you probably see this sometimes when we get into real estate, we see it through like this very small viewer. And it's like, oh, well, I'm just going to buy single family homes. But the beauty of real estate, it's crazy. I mean, we've had people on our podcast, as Joey said, that are doing self-storage, they're doing mobile home parks, that are doing land flipping. I mean, vacant land. I mean, note investing, BRRRR. I mean, you name it. And so there's so many different facets and segments that you can get involved in that you can then use your given abilities to apply to it. And, you know, some people have an eye for going into a place that's like demolished and going, man, if I do this, this, and this is going to be a beautiful home. I walk in and I'm like, this is a demolished home. Let me out of it as fast as possible.
Disaster.
I don't have that view, right?
Yeah.
But that's the benefit. There's so many different methods that exist. And that's kind of why we love real estate. So the answer is yes. You got to find the one that I think you got to have some sort of assessment that tells you this is who I am. And then you kind of get guided down the road. But just try. We always tell our clients who are interested in real estate for the first time, one, get on, listen to podcasts like yours, right? Get educated, spend some valuable hours investing in yourself and your knowledge. Then go get into some meetup groups and networking, find out what deals really look like, and go do a couple. And you might find out, you know what, that's not really what I want to do. And then go do some other deals.
Yeah.
And start small and just grow it. And it's just such a beautiful business because there's so many facets to it.
Well, and that's also why we created the community, is because no one of us is an expert in all of these things. So we want to have a place where there's a place where you can go and learn from those experts in one place, right? So they're not all going to be teaching the same thing. They're teaching all different things around real estate, but that gives people an opportunity to learn from those experts and not from Joey and Russ, who, by the way, I can teach you how to buy a condo at the bottom that has neighbors above it that like to just flood it from time to time. So that's the expertise I bring to the real estate world.
That's why you got to bring the experts. That's it. You got to facilitate it. Awesome. So glad we covered real estate. So last, but I'm sure it's not least, what is the fifth and final pillar?
Yeah. So the fifth one is lending. So when we kind of built this model out, it's not that any one of them are that much better than the others, but we kind of followed that kind of hierarchy of wealth that, that basic kind of move through this approach. So the bottom tier is really kind of cash, then control, then collateral, right? And so one of the things that we see, and you probably have a lot of similarities in this, is that people get in the lending business, whether it's hard money lending, if they're lending on cars or homes, and it just was kind of a natural fit for Joey and I because of his background in the mortgage world for us to kind of build out a model that where we teach and help educate around the concept of lending, right? I mean, lending is an age-old thing. People are never going to not need access to money. It's resistant to recessions and other things, right? People always need access to capital, and lending is a great tool for that. And so what we've seen is, again, just following what banks do. They're very successful in making money through lending. And we've done personally a bunch of lending opportunities. We've got into lending money against cars and houses and businesses and lots of other things.
Yeah. A lot of our clients have the necessity to build a family bank, so to speak. So they start to see the power of what lending can do within a family, because everybody, you may have parents that have cash, or grandparents, let's say, that have cash on deposit at a bank, and simultaneously you're borrowing from that bank for your house loan or for your car loan, or fill in the blank. And what we really kind of discovered, and we teach it on a regular basis, is really you should take advantage of that, because your grandparents, let's say, are earning that 0.01% when they could be earning the 6% that you're paying on that credit card or whatever it might be, but you're just not connecting the dots. Someone else is sitting in that middle ground and they're making the profit that you should be making.
Well, a perfect story of that, Greg. So my wife's a dentist, and in 2008 is when she started dental practice. I was helping my father-in-law, her dad, with his money at the time and helping him managing it. And he just inherited a few years before that. His dad had passed, and he had owned a bank, and that bank had been sold to Bank of America. So he inherited a good deal of Bank of America stock. And, I just trying to be the good, CFP, trying to help him, reduce his risk. I put this stop loss on his stock at like 15%. Now, Bank of America had traded roughly at the time around $50 a share forever, right? I mean, it had not really ever deviated. He never really cared about the price because it was paying a really good dividend at the time. And he just knew this is something his dad had. So my wife goes and gets a bank loan for her dental practice, a little over $600,000 from Bank of America. This is at the end of 2008. Well, about the same time as when, the financial markets and especially the banks started just dumping, right? And so all of a sudden his bank stock just soars through this 15% stop loss, and it sells every share. I got this like ridiculous call from him. It was probably about a 2 or 3 week period of time where he wouldn't talk to me. He was so frustrated that I had sold, I'd put this stop loss on his stock, and he had sold it all because he was assuming that was just like a blip in the road, and it was about to come right back up, right? Now, ultimately, I think the stock bottomed somewhere around $5 or $6 a share, and they took all the dividends and did away with the dividend. That went down to like 1 penny or something. It was something stupid. And so then I became a hero, right? They've kept me around since then. But it was like this period of time where now all of a sudden he's sitting on a ton of cash. And so at the beginning of 2009 is where I was learning some of these ideas that we're sharing on this podcast. And I was like, wait a second, like he had this Bank of America stock that now is just sitting in cash. My wife's over here borrowing money from the Bank of America by chance. What if we could put those two things together? Wow. and so like I had this conversation. At first it was a little awkward, right? Because anytime you go talk to parents
family
and stuff like
money,
that about
absolutely.
Money, it's like, because usually whenever you have the kid come to the parent says, hey, by the way, I need a loan, that means I need a gift, like I'm out of money. But in our situation, it wasn't the case. My wife had a very successful business, and she was paying her note. And so like I showed it to him, and we literally took a chunk of this cash that he was just sitting on and just went and paid off the Bank of America loan that she had. And for up until she sold her dental practice, actually earlier this year, we were sending him checks anywhere between about $6,500 and $8,500 a month because we had done different loans with them. And it was a great thing. Like he was earning at that point in time is just under 8%. Well, where else could he have gotten 8% on his money in 2009, 2010? I mean, it was a very beautiful thing for both my wife because she was going to write the check anyway, and for them, they were getting it. And so we married those strategies together and applied some of those other kind of pillars within it. And so it's just been firsthand to us to say lending is something that's going to happen. Banking happens regardless of we're either a depositor or a borrower, but it's happening. And if we can be a part of that game and facilitate good deals, and it may be, lending money against real estate that we already know about, right? Like maybe that's another way to be in the real estate game, is to be the lender to somebody.
Yeah. No, that's awesome. And I like how you guys kind of end with lending, because it's like that's I wouldn't say it's the most complicated, but it's almost like it's like that highest level. Like you're the lender now, you're the bank, And I like how like with the 5 pillars that we've covered today, how you started with the simplistic, almost you compared it to the hierarchy of needs, cash flow, and we end with lending is when you're the true shovel salesman, as I
That's right.
True. I'm getting a hard money loan on a property, and I was on the phone with my buddy. This is before we recorded the show, and I said, man, we got to stop digging for gold and start selling these damn shovels. I'm like, because they're just packaging these loans up and selling them to Wall Street. Your worst enemy. And they're making a fortune, and I'm the one paying the interest and the attorney fees.
Well, if you think about that too, I mean, a lot of people that are listening to your show right now, they're trying to do deals just like you are, and in the real estate deal, it's 2 things. One, it's either access to deals or access to capital.
So true.
And the better you get at it, the easier those 2 become. But a lot of times, your family is sitting there, especially the parents and the grandparents are sitting there on cash, is sitting in banks, the same banks you're trying to go to and borrow money against. And it's like, can you pair those together? And it's not always perfect, right? But you need to follow the right protocol. You need to make sure you have all the things in place. If you fail to pay them, they need to foreclose on the property, no different than the bank would. But who would you rather be paying interest to, a family member or to some entity that you don't know and never going to get $1 back from?
Then they're not going to work with you. They're not, they have no empathy. They don't, I couldn't agree with you more there. And that's why this whole private money thing, which is the point of my podcast, right, it's real. You can find people with cash who don't have the time or the knowledge to do these real estate deals. And on the other side, you're the principal owner and you got all the deals in the world, but money's could be a lack sometimes with, the deal flow, and marry those 2 and everyone's happy. Right. So
that's right.
I really, really appreciate the show. And I think this is going to be a really popular one because a lot of people probably aren't too familiar with a lot of these concepts. So if folks were, let's just summarize, we'll summarize the 5 pillars, and then we'll give people some ways they can contact you. And I know you guys have something you want to discuss that you're starting in the next few weeks. I'm sure it's going to be launched by the time the show is published. So let's cap off the 5 pillars, and then we'll conclude the show.
Yeah, so just kind of from bottom to top, we start with cash flow. We go to life insurance, and our preference, again, sometimes people hear life insurance and do some research. Our preference is dividend paying whole life insurance, just because we don't really want to try to get into things that that's market related. But then we go into focusing on your own business is 3, real estate 4, and lending 5.
Love it. Those are the 5 pillars: cash flow, life insurance, your own business, yourself, real estate, and lending. The ultimate way to beat out, you become Wall Street, right? So awesome. So I just want you guys to share a little bit about what you guys have going on, what you're launching, and then we'll give everyone some contact information.
Well, just the quick background is that we have found that a lot of people want to learn this whole idea of building wealth without Wall Street, but they don't know where to start. And they have to unlearn a lot that they've been taught. As we've talked about, Wall Street's done a great job of teaching us, and big banks have taught us to where to put our money, and it's not for our benefit. So what we've done is we've created an online community where people are sharing ideas. People are coming in around these 5 pillars, and they're finding their niche, and they're educating themselves with the experts. So all of our podcast guests come on for Q&As into the community. So, because, how many times, Greg, are you listening to a podcast and you're thinking, man, this guy really should have asked this question? Or, man, I wish I could ask this guy this question, or fill in the blank. That's what we're giving the people who are members of our community the opportunity to do, like an hour-long live Q&A with the podcast guest after the podcast is aired, so that way they're prepared and they can ask their questions. We've got resources like videos. We've got all sorts of live coaching calls with all the different 5 pillars. We have access to tax strategists and attorneys, so that if you have a legal question, we have like a law call time every month where you can dial in and ask a lawyer or an attorney a legal question. Maybe it's about a deal you're working, or a contract or whatever.
How to structure a contract. I think it starts with like just knowing when you come in, like having a financial assessment done, having a personality assessment done, which these are just tools that we're building within our community that can kind of tell you, hey, this is where I am. And then also you can now set this like track that you want to run on, this pace that you want to get there, right? If, we have clients that are like, man, I want to have 100 doors within, 3 years or 10 years or 20 years, or I want to own my own business, or I want to grow out of this S quadrant to the B quadrant within this period of time. And what we start looking at is from all the way to the bottom of like what we were talking about, like the simplest things on cash flow. Are we deficient in any of the basic areas? Are we subjected ourselves to, liability stuff when it comes down to maybe just as simple as like umbrella policies and things?
Yeah, right.
All the way to looking at, am I structured right with my within my entities? Do I have the best tax structures? Am I, prepared from a cash perspective to invest into these deals? And then we want to start teaching and putting people in place that they can actually learn from experts. Like Joey said, our expertise is really more in those first 2 pillars. But then that's when we bring, consultants in on the other 3, and they get access to not only a network of people across the country that are trying to achieve the same kind of time freedom in most situations as they are, but they can listen to somebody else ask a question of one of these experts that they wouldn't have thought of, but helps them. And we always say, there's 2 ways to get information. One, you can, borrow it. And that's, using somebody else's questions and rely on that information to help us, or we can pay retail for it. And that's when we go do it on our own without knowing, and we make lots of mistakes and it's expensive. Sometimes those are good, but I always prefer borrowing if possible.
I couldn't agree with you more, man. It's you're condensing you're condensing the knowledge. You're compressing it, and you're speeding your growth up. So I couldn't agree more with that. What is that quote? If I had 8 hours to chop a tree down, I'd spend the first 7 sharpening the axe, right?
No doubt.
That was Jim Rohn too. I got all the Jim Rohn stuff. So if you need more, just holler at me.
I love it.
If people wanted to find out more information to get in touch with both of you, wealthwithoutwallstreet.com, is that the link?
Yes, you can go to wealthwithoutwallstreet.com, or please go check out our podcast. We'd love to, share that with you. But if you want to get connected into this community, you can actually go to community.wealthwithoutwallstreet.com and kind of see what we have going on there. And if you want to be one of those kind of across the country that gets plugged in, there's some great tools and ways to do that.
Awesome. Okay. We'll put all that in the show notes here. Wealthwithoutwallstreet.com. And do Wealth Without Wall Street podcast. We'll have all that in the show notes. And I'm sure some people will be taking you guys up on that offer. So once again, I really appreciate both of you guys for coming on the show today. You provided a ton of value for everyone, and hope you guys have a great rest of the day.
Yeah. Thanks for having us.
Thanks again, Greg.
Awesome. See ya.